There's a lot of moving pieces with today's data just because we had large revisions to both the payroll employment and the household employment. And, and some things aren't as comparable from December to January in households. So this is just a really tricky one to get down into the details of it. So so it's kind of more of a January effect with like bringing a lot of data in. But broad brush, I agree with your characterization. The payrolls, you got to take that, a set of them together, not focus on just this latest number, because again, hitting consensus with all these moving pieces was going to be tricky today. And those payrolls look good. I think it is, that's kind of a warm average hourly earnings number on the wages, but the other wage data that we've gotten has looked more moderate. So, there's plenty here to pour through.
I'm struggling for news here, Paul. I got DXY back to 108, so I got a stronger dollar.
Stronger dollar.
Claudia Sam is saying nobody cares, but,
Well, S&P futures down just 13 points, NASDAQ down 56, and the 2-year Treasury yield, as John was reporting, up 4 basis points, 4.25% right here. Claudia, so what's the next data point here? If you have a sense that the labor market remains solid, what's the next data point that you will be looking for and you think the Fed will be looking at?
Right. Well, this very much continues the Fed's, the labor market's in a good place. We have the luxury of time. We can wait and see. So what are they waiting to see? They're waiting to see what happens with inflation. Right. So the next most important data are with the CPI and to see if we continue to make progress, and everything they've got here today kind of lets them stay in that, on that trajectory.